Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Gold and silver in hiatus as equities fail to crash for now. Keyword is for now. What does this mean for precious metals? That's what we're going to be jumping into in this video. So before we start, make sure to smash that like button. Like always, let's set a 150 like goal. Every single one of you, go like the video right now. It helps support the channel in more ways than you ever could imagine. So let's jump into the article. Some continuing and, in our view, totally unwarranted strength in equity markets has continued to adversely impact the gold price. This remains hovering above the $1,700 level, while the gold to silver ratio remains stubbornly in the low hundreds and teens. Bad for silver. Still not far off its all-time highs. This, as far as the gold price is concerned, seems to be the counter to logical interpretation of the continuingly depressing economic data which should be impacting the markets. Indeed, as I write, gold and silver prices are again under attack, with gold falling back to the nearly $20 and silver by similarly percentage levels. PGMs are also trading downwards, although we doubt that nowadays they should even be considered as part of precious metals complex. We would not, therefore, be too surprised if the once high-flying palladium prices ends the day with below that for gold, something that would have been considered hugely unlikely only a few days ago. As readers of my articles will be aware, I've been hugely bearish on palladium for some time now, given that the global light auto sales sector, on which this PGM is hugely reliant for its demand, has petered away to near zero over the past few months, so looking bad for palladium. U.S. equities, of course, are being buoyed up by continuing strength in tech stocks, several of which, but far from all, are benefiting from the lockdown economy. The strength of Microsoft, Google, Amazon, etc., major gainers from the global digital economy, which have replaced manufacturing as the principal market drivers, has dragged up other so-called tech stocks with them, many of which have never turned truly accountable profits, thereby ignoring the multitude of major non-tech companies which are filing for bankruptcy protection or seeing profit decimated by knockoff effects of the virus. U.S. unemployment is soaring and the economy is diving into recession/depression states, yet equities keep recovering in the expectation that Fed bailouts will keep companies solvent and raring to go once the virus-related restrictions end. So where does this leave gold and silver prices? As far as the former is concerned, we do believe that sooner or later the realization will sink in that perhaps the economic fallout from the virus is unlikely to see any signs of recovery for many months at the very least, particularly in the second quarter reporting season approaches. Economic data to date suggests that there will be an enormous downturn in corporate profitability. Even some of the high-flying FANG stocks may not be immune, and the currently inflated values of equities will look even more suspect than they already are looking today. Surely gold as a primary safe haven investment will look more and more appealing to the mainstream investor? That's a question. We are already seeing record flows into the easy gold investment option, gold-backed ETFs, and sales of small-sized gold bullion coins and bars are picking up nicely for those who prefer the physical over the paper-related version of what some might term be the ultimate safe haven counter. So demand for gold is obviously rising, but that does not mean silver is on the same platform, though. Gold and silver are pretty different in when it comes to safe haven. People turn towards gold for the safe haven investment. We are currently facing a plethora of seemingly enormously adverse economic data being released by government statistical entities, and this data is likely to get worse before it gets better. Indicators like unemployment levels, PMI readings, retail sales figures, manufacturing output, etc. are all continuing to get worse. At some stage, this all has to adversely impact the overly optimistic tone of the investment public, and when it inevitably does overwhelm, then we are likely to see an enormous equity downturn which will confound the snake oil salesmen on Wall Street and other bourses whose jobs is likely to try to talk up the market regardless. After all, the bankers and financiers of this world benefit from the most rising markets being able to continue to drag investors into the financial merry-go-round. That does what it seemed like it is. It's coming full circle. Indeed, investor logic may no longer be that significant a part of the investment equation. Much stock market activity, probably most in fact, is nowadays made by a computer, and once the algorithms that drive the computer-generated trades start to turn negative, the fallout could be devastating for equities investors. But what may be disastrous for general equities investors could be hugely beneficial for gold, in which, or in turn, could drag silver up with it. And that's definitely true, right? Silver is gold's little brother, and silver does follow suit sometimes. It just takes a couple weeks, a couple months afterwards. But don't necessarily expect the kind leverage of gold and rising of precious metal prices scenario to historically reflected in silver prices to be evident this time around. Silver may look appealingly cheap today, but the realization is currently ever growing that it is no longer a true monetary metal like gold, and increasingly reliant for its demand on the industrial sector, which is itself a major downturn. And silver, by all accounts, is in a substantial surplus, and such a surplus at a time of falling industrial demand is not a good position to be in. The metal may gain some traction due to its historical association with gold, but its now industrial demand relationship may continue to mitigate prices as it is with PGMs, which is interesting. We can talk about that for a second, because I actually made a video yesterday talking about this situation exactly, how silver is losing its monetary metal. But there was an article I read that broke that down. I really hope you guys saw that. It was an amazing video. It broke it down and explained how silver still is a monetary metal, and how even if our currency does become gold backed again, how silver would still have to be used as change, and how silver is still finely tuned in with gold. Not only does the gold to silver ratio show that, but the surplus in the industrial economic society, silver is going to be seen as a metal or as an investment. It always has been and always will be. There is increasing advice out there that if one is to place one's reliance on gold to see you through the current virus-related economic crash, it is wise to invest directly with bullion rather than the paper version thereof. And that's because it's pegged. See, you don't want to go digital. If you can't hold it, you don't own it. That's the saying of the stackers. If you can't hold it, you don't own it, and you don't want to fall victim to that. That does suggest that it may be sensible to have your own total control over an asset rather than rely on a third party for your investment. And that's true. You have a middleman. But if holding is substantial, it does raise security issues which could be costly themselves. Even bullion held on your behalf in secure vaults or safety deposit boxes does rely on a third party, which itself could be subject to pressures outside of your direct control. Gold mining stocks may be another way to increase leverage in rising gold price scenarios, but mining can be a risky business, so if this is a route you may wish to follow, it is probably wise to invest in companies which have a wide diversification of producing assets. This may reduce the potential for massive gains, but the bigger gold mining companies should still do well in a rising gold price scenario, and most do have the benefit of issuing regular dividend payments that in most cases exceed the kind of returns that one can expect from a bank deposit scheme, assuming you can find one which pays any kind of return in these times of ever falling often negative interest rates. So we have a lot to talk about. I'll try to wrap it up quickly. So equities fail to crash, and that's definitely going to affect gold and silver, and people are kind of waiting. Like they said, I like the word hiatus. It's kind of on pause to see where things are going to go. We still have many different factors that could affect precious metals prices, though, and there's not one window of opportunity. There's many different windows of opportunity that could escalate or de-escalate prices, either rushing towards a bull market or rushing towards a bear market. And that's why sometimes it's better to just hold off. You don't always want to be making a quick decision in these markets, because that's how you can get bit in the butt. Sometimes you want to just keep a keen and watchful eye over the markets, see how all this plays out, see how equities do, see what happens, and then you can invest to your standards. If you're investing right now in the mix of all the chaos and controversy, then you're in it, right? You stay on the sideline. That's not always a bad option. That's what I'm doing right now. Gold and silver prices, I'm extremely bullish on silver regardless, so I'm still going to be buying silver, and that's how it goes, right? Some people want to hold off and see how the market goes, and that could determine or reflect on where they go in the future, whether that's their impulse buying, panic selling, their exit strategy, and how they liquidate their stack. It is up to you at the end of the day. I just don't want you to sell yourself short or to buy into all the hype. So anyways, I'm going to wrap this video up here. If you did enjoy this video, if you thought it was educational, informational, or at least just entertaining, make sure to smash the like button. We have a 150 like goal on this video, so please like the video. I definitely think we could reach that, especially even if a small portion of you guys like the video. Please like it. Anyways, I'm going to wrap this video up here. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.